Okay. In view of the very international nature of this audience, I think the Australian greeting, good day, is probably appropriate. So good day to everybody. I want to talk about the COVID-19 pandemic and the oil market. Let me give you a brief outline of what I want to talk about. I have two questions, essentially. What are the key uncertainties? And here I want to look at three issues. How long will the pandemic last? I have no idea. What about the nature of the behavioral change that's happened? And then look at the impact on the energy transition. My second question is to ask, what is the impact of the pandemic on the oil market, the oil industry? And in a rather arbitrary way, I've divided it into short term, medium term, and longer term. The short term is basically this year, medium term to 2025, and then longer term is after that. So let me start then with the key uncertainties. The first is, as I said, the length of the pandemic. This will depend entirely upon getting an effective, widely available vaccine, and I have absolutely no idea when that's likely to be. I only hope it's sooner rather than later, but we can't know. And the reason this matters is because that will directly influence the length of time that people have for lockdowns, especially given that it's clear there are further waves of infection happening. So the length of the pandemic is going to be important. The second uncertainty is that there have been major behavioral changes as a result of the pandemic. This has largely been the result of government intervention, regulations, enforcing lockdown, etc., but it's also been by individuals as well. And the question here is this just a blip? In other words, will the classic joke in 5 years' time be knock, knock, who's there, COVID who? Or is it going to make a major discontinuity in the way in which people behave? Are we going to see serious changes in working practices? For example, one of the things I suspect that's come out of the lockdown, certainly in the UK, is the realization that half of the meetings people attend are a waste of time. You don't need all that, and you can work perfectly well from home. There are also concerns over issues to do with self-sufficiency and the length of value chains. How vulnerable are you to getting your factor inputs? But crucially, I think the big change relates to the role of government and ideology. I would suggest, and I realize this is probably controversial, is one of the consequences of the pandemic is that the Washington consensus, i.e. leave it to the market, is now finally dead and buried. That it's clear that governments have to intervene, but what the nature of that intervention is likely to be is another matter. Okay. Sorry, getting used to this. The third uncertainty relates to the impact on the energy transition. At the moment, we're going through an energy transition away from hydrocarbon molecules to electrons. Now, before the pandemic, this was already accelerating. And in my opinion, it was being considerably underestimated by what I call the energy establishment, the IEA, the OPEC Secretariat, the international oil companies, etc. And they were really underestimating the speed and depth of the transition. Interestingly, the contrast to the financial community, which I think has been a lot more aware and a lot smarter than the energy establishment. Now, there are two possible outcomes here as far as the energy transition is concerned. The first is that the transition continues to accelerate. There's a common myth around that people say, oh, energy transitions are a slow process. Well, if you look historically, there's some evidence for that, but they can also be very quick when governments want to intervene. And the classic example I've given you here is the case of France, which had a major energy transition within 10 years because of government intervention. So will the transition continue to accelerate? Certainly the drive to net zero carbon coming from governments and from companies is going to speed that up. The alternative is that the energy transition loses momentum. Several reasons for this. First of all, one might say, well, the political will is being distracted by the pandemic. The other is that, well, fossil fuels have become cheaper, and therefore this will slow down the rise of renewables. Now, that's not really true for oil. I'll come back to this in a moment, but oil doesn't directly compete with renewables, but gas does. And of course, many gas markets have their price linked into the price of oil contractually, although that is something that is kind of dying out. So, what's the short-term impact likely to be? If we look at the oil markets before the pandemic, then it was dominated effectively by the oversupply and the legacy of 2014, when that oversupply led to a collapse in prices, which you can see here from the top right-hand diagram. OPEC was struggling. OPEC Plus was created to try and protect prices. That was also struggling and then collapses in December 2019. And that led directly to effectively a price war between Saudi Arabia versus Russia. The result of all this is that inventories were rising and prices weakening. And you can see the rise in inventories in the bottom right-hand figure. I use US inventories as a proxy for global inventories. It's not strictly correct, but the other inventory data is pretty poor, whereas the US data it's not brilliant, but it's reasonable and it's reasonably up to date. And as you can see, you've got that spike of increase as we get towards June of this year. The result of this is that COVID-19 comes along, you have lockdown and effectively economic collapse. So the weakness in oil price that we saw before is greatly accelerated because of the collapse in oil demand. Now, there are various numbers floating around as to just how much demand has fallen. Now, those of you who are familiar with the oil industry know that one of its biggest problems is that the data are awful. The data are terrible. They're constantly being revised as more data comes in. And so when you see numbers about how much oil demand has fallen, you need to be careful. The data is not particularly accurate. However, I think you can say with a degree of certainty that whatever the number is, it's a large one. In other words, there has been a spectacular fall in demand. And the results, as we can see from the top right-hand side, is that the price collapses dramatically. This forces a revival in OPEC Plus, which gives some support to prices. But the fact of the matter is that demand remains weak and oversupply continues to dominate, together with fears of a second wave of the pandemic. So although there's been some recovery in prices, there's not been a huge recovery in prices. Let me now turn to the medium term. I look first of all at demand. The lockdown has led to an economic collapse, and I would make an important point here. You're seeing lots of numbers being projected as to what the effect of this is likely to happen, but most of these are based on econometric models, and econometric models are simply not suitable to forecast such a discontinuity. Econometric models rely on the past repeating itself. Well, given the pandemic, that is not necessarily an assumption you can safely make. There is some debate in the literature. People are talking about oil demand destruction. And I think this is a mistake. It's not oil demand destruction. You only get oil demand destruction when the oil-using appliance is scrapped. while it's still there, it can be used again, and capacity to use it can be increased. And so what we're seeing at the moment is demand deferment rather than demand destruction. The implication of that is that demand can come back. Now, I think it's legitimate to ask the question, will the collapse in oil prices increase demand? And I would make 2 points here. First of all the emphasis is on lower crude prices, but what matters for demand is not crude prices, it's product prices. And in many cases, in many situations, the fall in crude price has not been passed on to the final consumer because the retailers and the wholesalers are desperately trying to protect their own margins. There's also the problem of something that I invented a long time ago called OECD disease. OECD disease, and you can see the diagram here, is when the consumer governments decide to raise revenue by imposing sales taxes. Now, of course, at the moment, most of these consumer governments are desperate for revenue, not least because of the growing need for stimulus packages, something I'll come back to a little bit later. And so we're quite likely to see going forward that consumer governments will try and take up whatever slack they can by increasing sales prices. Now, in the medium term for demand, what happens to transport is absolutely key, because transport accounts for, before the pandemic, about 60% of liquid fuels. There is here the issue then of the issue of physical distancing. How is that going to work on public transport? And I think the short answer is not very well, and that could well then give a bit of a boost to cars. Are there going to be more home working and fewer meetings? I am of the opinion, perhaps rather maverickly, that this sort of electronic way of delivering information is not really going to catch on. I confess I like flying business class and I like going to exotic places and eating different food. And until we have a beam me up Scotty moment, that's not going to be possible using these sorts of methods. Finally, in medium term, what happens if we have a long-lasting economic recession? Now, I think the probability of this is quite high. Let me explain. We've seen a lot of stimulus packages from governments in an attempt to offset the negative economic effect of the pandemic. The result of this has been, or will be certainly, a dramatic increase in the size of budget deficits. And this is going to place a limit on the extent to which stimulus packages can be presented. I think another issue here, and this is not being talked about very much, and it's very much a bit of Keynesian economics, is that one of the consequences of the pandemic, in my view, is you're going to see a dramatic increase in precautionary savings by consumers who are uncertain what the future is going to hold and therefore are not going to go out spending wildly. That is therefore going to constrain aggregate demand, which means that the economic recession that we're going to have is likely to last a lot longer than many believe. There's also the issue of what happens to globalization and self-sufficiency. There is growing concern about import dependence. People are talking about the end of globalization. I think that's probably a little premature, but nonetheless, you can't rule it out. There's also serious possibilities of trade wars, particularly the way things are going between US and China at the moment. What about the supply side? Sorry. You can look at three groups here. First of all, the oil-producing countries. For the oil-producing countries, the pandemic has been an absolute disaster. The top right-hand diagram there shows you estimates of the budget break-even price. This, of course, is before the pandemic struck. And you can see there that virtually all of the oil-producing countries are going to face serious budget deficits. And this means for many of them an inability to spend. Now, if you're looking at the Middle East particularly, an ability to spend has been key to trying to manage domestic unrest within the countries. A lack of ability to do that was going to have serious consequences. And it's quite likely that we're going to see a series of failed states in the Middle East and North Africa. One of the dangers here is if you have domestic problems, one of the best ways of diverting attention is to go on foreign adventures. So does this mean that we're going to see greater conflict in the region? Also, the question of the United States versus Iran. How is that going to play out, particularly as we move towards the US presidential election in November? Clearly, it's in Donald Trump's interest not to start a war in the Middle East because that wouldn't do his re-election chances much good. But what about the Iranians? If they thought they could draw the US into a conflict, which might damage Trump's re-election chances, what's the likelihood of that going to be? The second group is the international oil companies. And the international oil companies are struggling financially. And indeed, their old business model is no longer fit for purpose. And in 2016, I produced a Chatham House report. You can see the details in the bottom right-hand corner of the slide, which basically looked at what the problem was with the old business model. There were a number of issues there that we could talk about, and I'm happy to go into more detail if people want to pick it up in the questions. But the problem is that their old business model no longer being fit for purpose, they're trying to keep the shareholders on board. And they're doing this by adopting a strategy of diversification. Now, for any of you with a long memory, as particularly of the oil industry, you will know that we've seen this before. At the start of the 1990s, the oil companies said, oil is finished, it's a mature industry, we're going to start diversifying. But their record on this was pretty abysmal. They started by diversifying into other energy forms, such as gas, coal, and nuclear. Then they started to go into petrochemicals. Then they started to get very silly, and they started to go into things like hotels and supermarkets. Gulf Oil famously once bought a circus, which caused much amusement. What do you do with the clowns? Put them in the boardroom. But the record of diversification was one of failure. And as we go to the 1990s, then the companies are saying, hey, we're not very good at running circuses. We have to go back to our core business. They're doing the same thing again now they're doing the opposite now, going back towards diversification. But there's a problem here. There is very limited economic rent in renewables. Now, this is a controversial area. There's an interesting study that's just been produced by Imperial College and the IEA, which looks at the rate of return on renewables in France and Germany and suggests it's much better than the rate of return on oil. But the oil world has changed since then. And if you ask the question, why did the big oil companies become big? It was because they had a great ability to create and capture economic rent in the oil price. There is no such economic rent in renewables. The national oil companies are also struggling. The budget problems faced by the producer governments are being translated into starving the national oil companies of funds. So what is the implication of this for prices in the medium term? I take the view that oversupply will continue to restrain crude prices. We have the OPEC Plus agreement. At the moment, all the signs suggest that compliance with the agreement is quite good, which is unusual because one of the reasons it fell apart in the first place was because so many of particularly the Plus nations, particularly Russia, basically reneged on the agreement. Now they're sort of trying to maintain compliance, but how long is that going to continue? And I can't help thinking it's not going to be long before you start to see price competition going on between the OPEC Plus members. What about the price recovery? And the question here is, will the US tight oil situation create a cap on prices? The assumption was that as if the price of oil remains high, this encourages US tight oil production. Now, of course, they have run into all sorts of problems since the pandemic because of the collapse in oil prices. A lot of them were nearly bust anyway because the whole thing was built upon a mountain of debt. Are they going to be able to start again? Well, some of the signs are that since the oil price began to recover and has sort of moved around the 40 plus mark, that there are signs of some recovery. Now, it's not going to get to the level that it was before the pandemic, but there's no doubt that there is a question mark that it could be a price cap. Again, I come back to the issue of a slow demand recovery, given a global economic recession, if we have a long global recession. In this context, renewables will be encouraged for several reasons. First of all, a lot of governments and companies have announced targets to drive towards net zero carbon emissions, and that is going to encourage the use of renewables. Also, self-sufficiency has become a more important policy objective. It's moving up the policy agenda. And renewables, of course, have the advantage that they give you self-sufficiency. You don't have to import the sun, you don't have to import the wind. Once the infrastructure is there, you carry on quite happily. A third reason that renewables are likely to be encouraged is a little more obscure. And this is linked to the idea that energy policy is going to move up the policy agenda in a post-pandemic world. If you look at who's been hurt the most by the pandemic, the answer invariably are those on lower incomes. So what's this got to do with energy poverty? Well, people point out that a third of the world's population don't have access to commercial energy. And people have been using that argument to say this explains why we need to give them more fossil fuels to get them over this lack of energy, which seems a bit of a daft idea, given that the people that are going to be really hurt badly by climate change are the poor. But the beauty of renewables is that they are small scale and decentralized. So if you want to solve the problem of energy poverty, a good way of doing it is to encourage the use of renewables. For those, again, of you with long memories, you will remember the discussion regarding Africa and phone networks of 15 to 20 years ago. People were saying, you never get a good phone network in Africa. It's too big. It's too expensive to lay all those cables. But of course, you now have an excellent phone network in Africa because of technological change and the use of wireless. A similar sort of argument can be made for the use of renewables. So I can see a world in which in the medium term and in the longer term, I'll come back to this a little bit later, that renewables are going to be encouraged in this world. Let me turn now to the longer term. And this revolves around what's going to happen to the energy transition. There's a lot of discussion, there has been a lot of discussion, certainly before the pandemic, about peak oil demand. Now, peak oil is not peak oil supply. That was something invented by geologists to upset economists, and boy, did they succeed in that. We're talking here about the peak oil demand. And there's been a lot of discussion about when is this likely to happen. Now, in my view, that's actually the wrong question. The correct question is what happens after the peak oil demand? Are we going to see a gentle declining plateau or falling off a cliff? Is it going to be quicker or slower? My view is that it's likely to be significantly faster than many people believe, and that we're going to see a dramatic fall in oil demand as we move towards the 2030s. Now, there are a number of uncertainties here. What about new technologies? Hydrogen is an interesting possibility. It's interesting because if you go back 10, 15 years and you go to international energy conferences, and I spent a lot of time doing that. As I said, I like going to exotic places, and they always have them in exotic places. Then hydrogen was the sort of top of the agenda. Over the last 10 years, hydrogen has sort of moved off the agenda. But in the last year or so, it's started to move back up the agenda, and people are talking about blue hydrogen, green hydrogen, rainbow-coloured hydrogen. The significance of this is that very often with technologies, if it goes out of the policy agenda, then not much is done on it. But when it comes back into the policy agenda, then the technologists start to play around with it. What about other options with new technology? Well, again, CCS. And that can be a big lifesaver in terms of if we can crack carbon capture and storage, then we can burn all the coal we want quite happily with no problems. Now, a little bit like the hydrogen, if you go back 10 years to energy conferences, everybody was talking about the importance of CCS. Went off the agenda, but again, last couple of years, it started to come back on the agenda, simply because people realize if you can solve this problem, and it's not a technology issue so much as getting the economics of it right. Another issue that's being talked about is a possible supply crunch. One of the consequences of the pandemic and the problems facing both oil-producing governments and oil companies is that the upstream capex has fallen dramatically. The IEA claims that oil and gas capex is down 33% in 2020. You also need to remember this is an industry of natural decline. So if nobody does anything, if nobody spends anything, then the natural decline rate is between about 6 to 9% per year. That amounts to 6 to 9 million barrels a day per year. And the argument has been that because of the falling upstream capex, when demand recovers, we could move into a situation where there is shortage of supply. And if there's some sort of geopolitical outage, geopolitical shock, it could lead to some sort of a price spike. It's not impossible. I think it's probably unlikely, simply because I think that the upstream capex will recover to some extent. What about the future for the international oil companies? Can they keep their shareholders? And that is the key, because if they can't keep their shareholders, then the shareholders are going to take their money away, and this will be seriously bad news for the IOCs. Now, there's been several recent announcements by some of the big companies involving in cutting down the value of their assets, impairments on stuff that they've bought, reducing the dividend. And the response of the stock exchange markets has been negative to this. How much more negative is that likely to come? If you look at the sort of theory of finance, a lot of the stuff that's been done says that shareholders are not very keen on companies diversifying on their behalf. Most shareholders apparently would prefer to say to the companies, give us the money back and let us do the diversification. We don't want you doing the diversification because you're no damn good at running circuses or supermarkets or hotels. The problem is that as you then get into a situation where the shareholders are losing confidence, this could happen very rapidly. So, do I have any conclusions? You notice I went over the conclusions rapidly then, because the short answer is I don't have any conclusions. All I have is a series of questions. I produced a recent report from Chatham House. It was published in August of last year, so obviously before the pandemic, in which I talk about a number of these issues, and you've got the reference there. You can download it and read it for free. My main conclusion is that there's huge uncertainty at the moment. And that's a bit of a cop-out, I know, but there really is very, very high levels of uncertainty. And that uncertainty is going to be linked into, I think, three issues. The first is, and I've already mentioned this, what I see as a major unmentioned problem, namely a rise in precautionary savings. Following the uncertainty created by the pandemic and its aftermath, I think it's very unlikely that consumers are going to rush out and buy. I think it's more likely they're going to save, particularly as unemployment starts to rise, which it invariably will do. This will have a serious impact on aggregate demand, and it's likely to therefore lengthen the period of any economic recession. The uncertainty will also affect the progress and speed of the energy transition. Now, as you've probably gathered from what I've already said, in my view, I think the energy transition is likely to continue to accelerate, which means that the peak of oil demand is likely to be sooner, and the aftermath of the peak is likely to be a lot more dramatic in terms of falling demand. And then finally, in terms of the uncertainty, it's going to affect investment decisions. And it's the investment decisions in energy, in all forms of energy, that is going to really drive the energy future. And if there's one thing investors don't like very much, it is uncertainty, unless the rewards can be very high indeed. And remember what I said about renewables, there is little economic rent in renewables, so the rewards are not going to be that spectacular. So if you put all that together, I think it's seriously bad news. First of all, for the undiversified oil exporting countries. And sad to say, that is most of them. If you look at the record of most oil producing countries, oil exporting countries, the record of diversification has been abysmal. And the reason for that is a complex mixture of the political economy, of the way in which the ruling elites have tended to stifle the private sector and grab all the best deals for themselves. Because if you're going to have a diversified economy, you require a dynamic private sector. It's also seriously bad news for the IOCs, because they will almost certainly struggle to retain shareholders as we move forward. So I'm painting a very negative, miserable picture. The only offset to that is to say that my colleagues often describe me as Eeyore on speed. In other words, I am innately pessimistic, and that shows this afternoon. So thank you for your attention, and I will now throw over to questions which Charles is going to manage, and I will stop sharing my screen and give you back to Charles.